Have you ever thought, I don't have enough money to start investing? Or, investing is only for people with thousands of dollars? If that sounds familiar, you're in the right place. Today we're going to break down how you can start investing with less than $1,000, and more importantly, where to invest it for maximum impact. The good news is, you don't need a fortune to begin building wealth. Even with just a few $100s, you can start making moves that add up over time. Whether it's stocks, index funds, ETFs, or robo-advisors, I'll walk you through some smart, beginner-friendly investment options and the platforms that make investing easy. No need to be a professional investor. And stick around because I'll show you real numbers of how your money can grow through the power of compound interest over the next 10 years. Trust me, you'll be surprised by just how much potential you have, even starting small. So what can you actually do with less than $1,000? The common misconception is that you need a huge sum of money to make a significant impact. But that's not true. The key is to start, even if it's with a small amount, and let time and consistency do the heavy lifting. And remember, investing isn't just for the wealthy. It's essential for securing your future. Understanding yourself, your financial goals, and your risk tolerance is the first step to making smart decisions. If you haven't yet, check out our short video on investment risk assessment for a great starting point. Low-risk investments, a safe starting point. If you're just starting out, you might prefer safer options while you learn the ropes. Low-risk investments are often steady and secure, though they may offer slower growth compared to higher-risk options. Here are some solid choices to consider when investing less than $1,000. 1. High-yield savings account. This is one of the safest ways to park your money while earning a higher interest rate than traditional savings accounts. While it won't make you rich, it's a great place for short-term savings goals, and the money stays liquid, meaning you can easily access it when needed. 2. Certificates of deposit, CDs. A CD is a type of deposit account that offers a fixed interest rate over a set period, such as 6 months, 1 year, or even 5 years. It's a great option if you're looking to park your money and know you won't need it in the short term. Keep in mind that the longer the term, the higher the interest rate typically is. 3. Treasury bonds or bills. Government-backed securities, like treasury bonds or bills, are considered low-risk investments. They provide stable, predictable returns over time, though the interest rates are usually lower than other investment options. However, they're backed by the U.S. government, so the risk is minimal. Just moderate risk investments. Adding a bit of diversification. If you're ready to step up your game and add a bit of risk to your portfolio, there are some excellent moderate risk investment options that can diversify your holdings while still being relatively safe. 1. Exchange-traded funds, ETFs. ETFs are funds that hold a basket of stocks, bonds, or other assets. With ETFs, you can invest in a broad range of assets without needing a large sum of money. Popular choices like the S&P 500 ETFs, for example, VOO or SPY, allow you to invest in the top 500 companies in the U.S. at a very low cost. ETFs offer a way to diversify your portfolio without paying hefty management fees. 2. Dividend stocks. If you're interested in long-term growth with regular income, dividend-paying stocks are an excellent choice. These stocks provide payouts, dividends, at regular intervals, typically every quarter. Companies like Coca-Cola, Johnson & Johnson, and Procter & Gamble are well known for their stable dividends. The best part? Those dividends can be reinvested to grow your investment further. 3. Robo-advisors. If you don't have the time or expertise to manage your investments, robo-advisors like Betterment and Wealthfront are perfect for you. These platforms automatically invest and manage your portfolio based on your financial goals, risk tolerance, and investment horizon. Robo-advisors use algorithms to make decisions, saving you time and effort while providing professional portfolio management at a fraction of the cost of traditional advisors. Higher risk, higher reward investments. For the bold investor, if you're willing to take on more risk for the potential of greater rewards, here are some exciting options to consider. 1. Cryptocurrency. Cryptocurrencies like Bitcoin, Ethereum, and other altcoins can be highly volatile. but they've proven to offer significant returns over time. Keep in mind that the crypto market is still relatively young and unpredictable, so if you go down this road, only invest a small portion of your portfolio. It's important to do thorough research and be prepared for the ups and downs. 2. Peer-to-peer lending. Peer-to-peer lending platforms like Lending Club allow you to lend money to individuals or small businesses in exchange for interest payments. While this can offer higher returns than traditional savings or bonds, it comes with increased risk. Borrowers may default on their loans, so it's important to carefully vet the platforms and loans you choose to invest in. 3. Individual stocks. Investing in individual stocks, especially growth stocks, can offer significant returns. Companies in fast-growing sectors like technology, clean energy, and healthcare have the potential to skyrocket in value. However, investing in individual stocks can also be volatile, so it's important to research the companies and industries you're investing in thoroughly. Pick investing in yourself, the best long-term strategy. Sometimes the best investment you can make is in yourself. The more you learn and develop, the more opportunities open up to you. Here are a few ways to invest in yourself with under $1,000. 1. Online courses and certifications platforms like Udemy, Coursera, or LinkedIn Learning offer affordable online courses that teach valuable skills in coding, marketing, finance, and more. These skills can help you advance in your career or even start a new business, providing an excellent return on investment. 2. Side hustles. Starting a side hustle is a great way to invest in your future. With a few $100s, you can buy a domain name, set up a basic website, or start a drop shipping business. These types of projects can eventually turn into profitable ventures, all while you learn valuable business skills. 3. Content creation. If you're passionate about content creation, such as podcasting, like AeroVision, YouTube, or blogging, investing in better equipment, like a quality microphone, camera, or editing software, can elevate the quality of your content. Over time, this could lead to growth in followers and potential monetization opportunities. Alternative investments. Thinking outside the box. Finally, there are alternative investments that could yield high returns if you're willing to take on some extra risk. 1. Real estate crowdfunding platforms like Fundrise allow you to invest in real estate projects with small amounts of capital. This is a great way to gain exposure to the real estate market without needing a large down payment or the management responsibilities that come with owning physical property. 2. Collectibles. Collectibles, such as rare books, vintage watches, and limited edition sneakers can appreciate in value over time. While this market can be highly speculative, it can also yield big rewards if you find the right items. Always do thorough research before diving into this niche investment class. 3. Fractional shares. Investing in fractional shares is a great way to buy a portion of expensive stocks like Amazon, Tesla, or Berkshire Hathaway. Platforms like Robinhood and Public allow you to invest in fractional shares, which means you don't need thousands of dollars to buy shares in major companies. To the magic of compound interest. Let's say you started investing $100 per month from 2012 to 2022 into an S&P 500 index fund, which has historically returned around 10% annually. By 2022, your investment could have grown to around $20,146. You would have contributed $12,000, but your money would have earned around $8,146 purely from growth. This is the power of compound interest. What if you doubled your investment to $200 per month? You could end up with around $40,292, with almost $16,292 coming from compound growth alone. If you went even bigger and invested $500 per month, your investment could have grown to around $100,729, with $40,729 of that coming from compounding. Final thoughts. This is the magic of consistent investing and letting time and compound interest do the heavy lifting. It's not about how much you start with, it's about starting. So what will your first investment be? Let's get started today and set the foundation for your financial future. Blast off!